I thought you are dating. Well, put for me because I put that water. I boil it for myself, and I'll. It's for you now. This one small. If it's for me, it's not even the time. Won't get to. We have to boil another one. If it's for me, boil another one. Put. Hello, Sarah. People never. Okay, oh yeah, take one to this out hospital now. Take her down. Which guy is there? Sarah, Sarah, how will they do? Who has that for once in your life? I will which guy is there?
Your mom has the chronic obstructive pulmonary disease.
BJ.
It's a disease of
Okay, don't worry.
your grown child that causes your lung to harden.
Don't worry. Come.
Okay.
Have I muted myself?
COPD is a disease that blocks your airflow and makes it.
I thought the class is going to start by 7.
Let me get back at this. So, wow. Still hear the echo of your laughter in the rain, dancing on the bridges where we whispered through the pain. City lights were painting, couldn't say. Somehow love got lost between the night and yesterday. I walked along the shadows to be the street. Your memory still calling out to me. Silence feels so loud where your heartbeat used to stay. And now just walk down.
I got it one on her boo. Mande kala de fana kama da. Kawum. Oh.
You'll remember your name, melody, your voice, never be the same. Your reflection, glass, fades with it, you cry, but I still speak forever. Every time I close my eyes. Content, this is my spec. Inside Rebounds, but it runs the chance. Was up in the song. Let me back to fly. Oh,
Okay. Maybe all these ones.
With the woman, oh no. She say I won't keep meat. Give me, I go keep meat. Eh? Am I on speaker?
It's the class I just joined now. What? That must be.
I lost some document or have gone.
Food no dey dey for belle spoil. Hey, Alagale na mmanụ. Wetin you dey use chop? I no even know. And I am with hot tea. Money no dey my hand.
Hello, everybody. Good evening. Can you guys hear me? If you can hear me, please let me know in the chat room. Can you guys hear me? Okay. Good evening. I don't want us to reschedule the class again, but we'll just have like a quick, like a shorter class than usual. So I'm gonna just please, if you're coming in, just mute yourself, please. You're coming in. Okay, can you guys see my screen? Okay, so last time we spoke about key levels as being one of the most important skills you will ever develop. Basically, to put it short, key levels are the points of the market where you're most interested in taking trades from. Depending on how strong a key level is, it could be your point of interest. So there are specific prices or areas in the market where it has shown repeatedly, multiple times in the past, and consistently that something happens there. Either buyer step in, seller step in, price react. There's always a very visceral, explosive reaction at that point. Either market breaks through with a big push up or down, or it reverses violently. And it tells you that most likely the market is going to have that same behavior next time. So support is a level, a price level where buyers have repeatedly stepped in and stopped price from going lower, which is why I said it's like the floor of a house. right? It stops the market from going lower because that is where most buyers enter the market, right? Now, imagine like a market store, like a shop, a malam in the market, and every time the price of a particular product drops to a certain level, plenty buyers flood in and buy everything, right? And so because of that, the value of that thing reduces and the price now, it now becomes what? Higher in demand. So the price does what? It goes up. It never stays there because that is where a lot of people are buying from. So buyers push it back up. So let's say now price of phone is $1,000, right? And let's say there's something that happens that it now drops to $800. You see a lot of people who sell phones will probably buy a lot, and even people who have been waiting for the market to drop will buy a lot. And because of their buying, they're making it more scarce, right? They're making that phone more scarce, meaning it is now going to become more expensive because they've bought up all the quantity that was around that area. So why is it that buyers show up at the same price level repeatedly? Well, because of something called large institutions. This is where they place massive buy orders, right? Because they know that there's a lot of liquidity sitting there. And so they are most likely to enter from a zone like that without a reaction. You understand? So when they place those orders, they did not use all of them at once. Some are still sitting there waiting to be filled out. And when price returns to that level, so remember I said that they are placing their orders there. They don't put all their orders there, right? Price must always reverse. So they will enter some there. And when price returns to that level, because it will usually always retest, they enter again. And those other orders activate, pushing it even way up. That's why you see if you're in a consolidating market, it usually like goes to the same places multiple times because it's trying to fill up as many orders as it can to push, right? So basically, in the forex markets, for every reaction, there's an equal and opposite action, right? Or for every action, there's an equal and opposite reaction. For every seller, there's a buyer. And until the market has enough, let's say market wants to buy, until it has enough buyers to push it, it will keep retesting its zone to collect more buy orders or to stop at sales, right? To stop at sell orders until it gets enough momentum to push in that direction. Obviously, you cannot see these orders because they are invisible, right? They're not visible on your chart, but you can see the effect of when this happens. Every bounce at the same level is proof that a lot of people are putting their pending other. So there are different ways. A lot of pending orders there, buy limits in case of buys, or if it's a sell limit, or stop losses. Yes, stop losses there, right? And then for those sellers that want to feel like the market is dropping, sell stops. So by the time all of those orders activate, right, it's why you see the bounce. And unless there's enough of those orders, that's when you now see a push, a massive expansion. And usually within during times of liquidity, when like market is very volatile, you will see that it doesn't even push that much. It usually would catch as many orders because so many people are active. And then all those orders there will trigger it to go and give an expansion, right? So a support is a point in the market where buyers usually step in and stop price from going lower. And resistance is the opposite. It's a price in the market where sellers have repeatedly stepped in and stopped price from going higher. It's the same thing I said yesterday or last class. Discount and premium prices, right? When things are cheaper, you buy. When they are more expensive, you sell. So sellers are waiting for the highest point, which now forms a resistance because they're not letting the market pass their point. And how do they know to put their orders there? Because in the past, there has been a resistance there. And it's not all resistance that is classified as equal. What are some examples of the ones that are valid? Number one, it must come with a very, very violent reversal, right? It must come with a violent reversal, especially after a new high in terms of buy or a new low has formed. So let's say a new low has formed, a new lower low, right? And it reverses immediately. That tells you that a support zone is forming there because buyers have stepped in. For resistance, let's say a new high has formed and immediately you see a sharp reversal. Let's say it was a long week, meaning that markets reverse so fast. What does that tell you? That sellers have stepped in. And those points are where we call resistance points for sellers. For buyers, it's called support. So in this analogy, ceiling works well, which is what I explained yesterday. A ceiling will never allow you to push past, no matter how high you jump. Even if you have oxygen, gravity cancelled out, it will never allow you to pass the ceiling because it's holding you down. That is the same way sellers stop price from going. Now, what exactly is the flip? This I mentioned last time. Can anybody tell me? I mean, I've already put it here, but can anybody tell me what a flip is? A flip zone, guys. Can anybody tell me what a flip zone is? Anyone online? Are you guys sleeping? Can anybody tell me what a flip zone is? Guys, are you online or am I just teaching myself?
Hi, good evening.
Okay, go ahead.
Okay, so a flip zone is when like support becomes a resistance and resistance becomes a support.
Okay, thank you so much. That is absolutely correct. It is the point literally when support becomes resistance and resistance becomes support. This is one of the most powerful and reliable patterns in all of Forex. And once you see it, you will always see it. When price breaks through a support level, that level often becomes resistance. Why? Because a level that was support had buyers defending it. So price kept bouncing off of it because there was a lot of buy orders sitting there. Then one day, sellers got so strong that they pushed through the level. They broke it. Now, those buyers who were at that support, they are trapped. They bought expecting it to bounce, and the bounce never came. So they got stopped out, adding more momentum to the market. So now what happens? By the time that momentum finishes, price will now go back to their level because it must always retrace. But at that point, it has already taken them out, right? And then guess what? Because price has broken past that zone, there was most likely a consolidation before price broke past. Sellers who are smart now think, oh, yeah, this is a flip zone. So they're going to now go and put their orders there. And remember what I told you about sellers when they put their orders, what do they do? They stop the market from going higher, meaning they cause what? Resistance in the market, right? And so that is why before you enter a trade, it's always advisable to wait, especially when market has broken past a trend. Don't go and rush to enter. Wait for a retest. Market must always test that zone to turn that previous zone that was a support zone into a new resistance zone. It's going to come back there to test, and you can put your sell orders there. Obviously, I would advise to wait for the liquidity to finish clearing out, because most times for that kind of thing to happen, there's a lot of volatility in the market. So it might have a lot of liquidity sweeps. So once the liquidity sweeps has cleared out, or if you put your SL wide enough, you can put your sell order there at a previous support zone that will now become a new resistance zone, and at least catch about 100 to 200 pips, right? Now, a broken support becomes a resistance. A broken resistance becomes support. That is literally the principle of flip zone, and it is one of the most reliable patterns you will ever trade as long as you get it right. This is why retest of broken levels are such powerful entry opportunities. Who was paying attention on Friday when Oni, she did this very beautifully. She dropped in the analysis, she dropped in the analysis talks group a buy trade that she was on, that she entered again after price had retested. And guess what? That buy trade pushed up like crazy. If you notice, market was finding it so hard to form that, to pass that zone. That resistance zone was so strong. But once it passed it well and came back, retested the zone and went on an even bigger push. I don't know who was active on that Friday. Only posted that and she caught some really good trades out of that, this simple strategy, right? So once you're able to master it, you literally have it down. Next class we have, I'm going to say, let's take our time. We're going to find key levels. We're going to find flip zones, and we're going to find what they call it, how to enter these levels. Because I still need to teach you guys entry models. Now, the rules of drawing key levels are very simple. Here is the problem most beginners have. They always draw too many lines. Oh, this place reacted. It's a key level. Oh, this, so their charts now start looking very messy, and it shouldn't be like that. All you have to do is very simple. Keep your charts clean and your levels meaningful. Somebody asks yesterday, what's the difference between support and resistance and higher highs and higher lows? They are all integrated, right? Because once a new, let's say, higher high is formed, and if it comes following it immediately is a very, very, very violent reversal, that higher high becomes a resistance zone. And if it is a strong one, meaning in the past you've seen a violent reaction from this point before, meaning it is a strong one, 1, 2, 3, 4 touch points, especially on the 4 hours time frame or on the 1 hour's time frame, then those are strong support levels. Swing points and swing highs and swing lows form very, very good key levels. So those are the ones you should keep your eyes out for. Right now, listen to this. Rule number 1: multiple rejections make a level valid. Remember, I just said that the single most important thing that makes a level worth drawing is how many times price has come to that area and reacted. 1 touch, maybe, be cautious. 2 touches, okay. Getting interesting is worth monitoring. But by the time you see 3 or more touches, that is a strong level. The market keeps coming back to that point and reacting, telling you that there are orders there, so you can mark that out. The more time price has respected a level, the more likely it to respect it in the future. And if price disrespects a level like that, you should expect a what? Retest that you can enter from, and a push, a continuation push. Obviously, it has to disrespect the level and hold above, because sometimes this market can be very manipulative, right? It will go and, push past the level only to just clear out liquidity. It's called a stop hunt. Take out sellers to continue buying. So you have to make sure that it holds above. Then you can enter the retracement, right? Now, secondly, the reaction must be significant. Sometimes price will touch it only touch it once, but when it leaves fast and hard, explosive. Like when I say violent, 100 pips in 1 minute. That kind of reaction tells you, this is explosion. This is a strong level, not the one that price to be decided to be like, oh, should I buy? Should I sell? You will not have to guess. That is how it will feel. You will not have to guess because it is very clear. A small, slow drift away from a level is not strong, but you see a sharp, violent one, and that is a level where there was a lot of orders building. Now, the third thing is only mark levels that are near current price. This is the rule beginners break all the time. They mark levels from 6 months ago, a year ago, way back in history, and their charts starts looking like a museum. You only care about what is relevant now and in the nearest past, right? If a level is so far from your current price that it will take weeks and weeks and weeks of movement to get there, it might not be useful to you today. It might be useful to you again later, but not today. For example, that sale that happened on Friday before the buy up, I had a zone there. But then when I drew that zone, literally 3 weeks ago, look at when it down activated. So those kind of levels are not really that important now, until when price gets to that place, okay, you can now say, yeah. But try and look for levels around your zones because it will usually have to go step by step. Now, the fourth rule is that levels are zones, not lines. It's not just one point. It's not just, oh, this place was broken. So that is, it is literally a range, a zone, a box, right? To catch multiple numbers, because if you sweep liquidity, you always sweep liquidity. So they are not just one point, they are areas, a band of prices. Price doesn't just touch, oh, 2,400 on gold exactly to react at a support zone. Sometimes it might touch 2,396 and bounce. Sometimes it might reach 2,420 and bounce. The zone is being respected even though the exact number was not hit. So draw your levels with some width, right? There should be some body to it. Think of it as areas, not just single lines. Now, how exactly to draw your levels? Next class, we're going to have a practical on this. So we're going to go through the chart, find different key levels. I'm going to look at, we're going to do some back testing to see how it reacted and all of that. So first thing, you set your chart, your daily time frame. This is where the most powerful key levels live. Although on gold, that daily time frame can be confusing, but start with that. At least let you have a general idea of what to be looking out for. Go back about 3 to 6 months, right? Look at obvious turning points, places where price reversed strongly. The reason I say that on gold it can be hard is because gold has been forming new highs lately. So if you go back, nothing is there. These places it's been down. If you look like when it's, especially right now, we're lucky to be at a zone that has reacted off of. But when it was at 5,400, there was nothing there. It was just higher highs, higher new all-time highs. So yeah. Anyways, but right now it counts. So look at 3 months ago, 4 months ago, where the price bounced, where how did it react when it reached there? These are not hard to see, they're very obvious ones. Then you find the areas where price has come back to the same time, multiple times and reacted. These repeating areas are your key levels. Go down to the 4 hours time frame, look at what the reaction is. That will reconfirm and solidify the idea for you. Okay. Like I just said, basically the same thing. I drop down to your 1 hour time frame. These ones are a little cleaner, obvious levels where price is right now. Mark the most strongest obvious level. Then step back and look at your chart and just monitor it. This is what is going to become your point of interest, the point at which you're interested in entering the market, or you're interested in what the market does. Some people will set an alarm when price reaches price, notify me with their trading view. Some people will just be monitoring the markets, but because your eye is there, you're paying attention to when it gets there, how it reacts. Okay, so tomorrow, like I said, we're going to do a more practical version of everything I just taught you today. Then we're going to talk about other blocks, liquidity, and what the market is really doing and how to enter off of other blocks. Okay, so guys, thank you so much for the time. Sorry for being a little bit late. I'm sorry that this particular class is a little bit short. Next time, we're going to come with even more energy. Okay, when you have 2 days left, day 2 will probably also be 3 days, divided into 2 days, because I don't want to rush and give you guys minimal this. I want it to be something that by the time we're done with day 3, you can at least be able to take some trades on your own.